My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. My friends, I'm just trying to make a little money. My job is not just entertain, but try to put this all in context. Call me, 1-800-743-CNBC. Tweet me, at Jim Cramer. All right, there's always a bull market somewhere. I end the show with that tagline every night. I say it because it's true. Look at today. The market looked hideous this morning, right on the heels of some horrific overnight futures action. But after the S&P 500 reached a level where it was down 10% from its highs, where it held last time, we started snapping back, with the Dow finishing the session up 418 points. Bye. The S&P gaining 0.55%, and even the Nasdaq didn't go down as much as it usually does. It was just down 0.14%. But it was a remarkable comeback, unthinkable even at 5 a.m., and a reminder that there is indeed a bull market somewhere. Even at the end of the worst quarter since 2022 for both the S&P and the Nasdaq, remember, that was when there was a bear market. It was a rebound that, for the first time in ages, put some fear into the bears. I don't know about you, but it was nice, liberating even, to have a day without fear, wasn't it? Let's look at the rebound's leaders to figure out why anyone's buying ahead of what I call the bash the heads in of your trading partners day, also known as Wednesday, also known as Liberation Day. Got a lot of names, a lot of rubrics. Finally, I spied the financials as being good. Wow. What's that all about? I think we may be going along the route that says there will be no tariffs on the banks, and the banks could soon be less regulated under this administration. Just this morning, Morgan Stanley talked about how Wells Fargo could be a huge winner if it finally sheds the darn asset cap implemented back in the early days of 2018, Feb 8th, yes, right before the Eagles win. If you read the piece, you think that the stock is a screaming buy. It had me from the first line. Quote, "It's a new era for bank regulation." Morgan Stanley said that once the asset cap is gone, it will allow Wells Fargo, which we own for the Travel Trust, to put up better loan growth, better trading revenues, and lower expenses. Wow.
House of pleasure.
I think that this piece was a bit of a life raft in the Atlantic. A note that says, hey, look at me, look at me. Remember the president said there'd be less regulation. Now it's going to happen. Hey. Sure enough, Wells Fargo went up, and it took the other big banks along with it. Continuing with this theme of financial deregulation, we're hearing that the very contentious deal where Capital One stated to buy Discover Financial, it looks like it might close. It's been taking forever. There was supposed to be some regulatory resistance by the Department of Justice, but the risk of the deal not closing seems now greatly diminished. Oh, that'll be used for Capital One, which I think could easily go up 25 points once the acquisition closes. That's what we've been telling people who subscribe to the CNBC Investing Club. Now, we believe Capital One, no matter what goes, it does fine. Again, the positive action here says, the tariffs aside, there's a lot Trump could do that could allow entire segments of the market to zoom higher. The Walmart White House, where we get everyday lower prices for stocks, maybe it's going to spare the financials. Good aisle. The health insurers are all roaring too. Why? Because they're domestic, very hard to tariff. And they could go much higher if you want to avoid the tariff shroud. CVS, which owns Aetna, has moved up again. Cigna's running. When you look at the regular insurance companies, think AIG, Travelers, and Chubb, they're all winning, and Chubb just hit a new all-time high. Now, I think premiums can go higher, and the insurers seem like a target-poor environment for the president's tariffs. The insurers, by the way, they're not anybody's friends that I know of. The White House doesn't seem to mind, though, so maybe they're a buy. Talk about strange leadership. An outfit called Coupon Cabin has put out a survey showing that cord cutting may finally be cooling. That ignited the stocks of Fox and Warner Brothers Discovery. Big winners. The reason? Rising prices for streaming services means that cable TV is a better value. Makes sense, and of course, there's no tariff exposure. See the theme? There's also seems to be a weird belief that somehow the tariffs won't hurt retail. I mean, that's how you got very big moves saying TJX, Walmart, Dollar General, Dollar Tree. Maybe their stocks simply got too oversold, or the tariffs are now baked in the stocks. We just don't know. But we do know that these retail stocks were rallying from the get-go this morning. They'll definitely be hurt by tariffs, every one of them. What's happening? I could say that people just got too negative. I could say that when the S&P 500 touched down 10% again right at the opening, flirting with down 11, we held at those levels, and that allowed us to bounce for a second time. Maybe you're seeing end-of-the-quarter retirement contributions being put to work, overwhelming the sellers who then walked away. More on that later. It's certainly, though, people, it's not random. This action seems to mock the idea that we're headed for a tariff-induced stagflation situation. Or perhaps let me posit something bigger. People are exhausted by this president. They don't know what he's going to do next. Thanks to his unpredictability, we're seeing so many bears, and they have had the whole quarter themselves. It belonged to them. Bears won, investors nothing. Maybe, though, what really happened today is that things have simply gotten too negative. BlackRock CEO Larry Fink, who writes an annual chairman's letter required reading for anyone in the markets, wrote some fateful words today, quote, I hear it from nearly every client, nearly every leader, nearly every person I talk to. They're more anxious about the economy than any time in recent memory, end quote. I come back and say, I believe that. I believe that wholeheartedly. But let's think about what that really means for you and me. We have declining inflation, except the president's putting on inflationary tariffs. We have incredibly low unemployment, except where it's caused by the Trump administration. We have a market that was doing extremely well last year until the Trump administration sowed a level of uncertainty that I can't recall any time since, are you ready, ski daddy, Jimmy Carter, which is the last time people were really worried about inflation, about stagflation, okay? Back then, stagflation was real. Now, Jimmy Carter, curious benchmark. Break out the cardigan sweater. I know it's a brutal comparison. You think I did it idly? I cannot think of another president in my lifetime who knocked down the stock market simply by opening his mouth than Jimmy Carter. Eureka! I have found him. So let's look at it this way. Everything about this economy is good. Everything, except one thing. We have a president who's very angry at everyone except Vladimir Putin. Oh, no, maybe even Vladimir Putin. And his wrath has made investors so downcast and so negative that people have just given up. They want nothing to do with stocks, nothing to do with this world, because they're sure the White House will keep laying on the tariffs that seem to be wiping out your wealth and my wealth. In this environment, it's a wonder anyone's buying anything, unless they think that the one person who's standing in the way of a great economy, one that could have incredible growth with lowered inflation, lower oil prices, less regulation, more confidence, will finally change the stripes. If Trump can lose the anger, drop the scowl, stop diminishing our friends and rivals while making common cause with our enemies, and generally start acting like he did in his first term, well, that would be huge for the stock market. As far as the stock market is concerned, though, we need less Jimmy Carter, more Ronald Reagan. Bottom line, maybe Wednesday is a deliberation day. It's just the day when American investors may be finally liberated from the president's not-so-pro-business attitude once he gets the tariffs out of the way. Bob in Tennessee. Bob.
Jim, thank you for your help. How about a quick twofer? Is Pfizer dead money?
Is Pfizer dead money? I mean, I think it's been mummified. I don't know. I mean, it's like, wow, look at that thing. Close the casket. What about you? You had a twofer, or is that it? All right. Well, that's okay. Pfizer is, unfortunately, dead money. Dr. Borla is a terrific guy, but, you know, it doesn't the stock make, what can I say? He's a terrific guy. He's a terrific guy. Ed in Florida. Ed. Terrific guy.
Jim, booyah. Hey, man, you're the shining star of CNBC. I've watched you for years. I love your show.
Ed, you're very kind. Can I have my wife dialed in right now? She's very mad at me.
Uh-oh.
She just drove back from Florida and says, well, you know, you really helped. And I didn't, not at all. Not one bit. Okay, go ahead.
You come see me anytime, and I got lunch or dinner. But, hey, so here's my question. I don't diversify. I just go in super hard on whatever I do. I've been in and out of Verizon twice in a year, collectively up over $17 a share, 5 giant dividends. And this weekend, I woke up twice dreaming that the market was burning down. So I got up this morning.
No, that wasn't a dream.
I sold everything.
Okay.
So
oh, you did? Did you really? Or was that in a dream? Did you sell everything, or in real life did you sell everything?
In real life, I sold everything, but I'm way up again. So short-term dividend, short-term taxes suck. But you know, Verizon has 4 great things. They get paid because everyone wants their phone.
Right.
They got a great dividend. They got a low price and a low PE. And these stocks with 100 times plus PEs, in my mind, I can't ever buy that. But
okay,
I don't understand why that stock doesn't do way better.
But that's a utility. It's a utility, Ed. And all the look at American Electric Power. Alone, my favorite. I mean, that stock trades like Nvidia used to. I'd rather be an AEP than NVDA. Now, that is a statement and a half. Now, go back to sleep and buy those stocks back, all right? Let's go to Zach in Texas, please. Zach.
Hey, Jim. How's it going? Second-time caller. In fact, I asked you about NVIDIA in 2017 last time I talked to you.
I liked NVIDIA. My dog was still alive. My dog NVIDIA was still alive. He loves steak, by the way. All right, go ahead.
Dell, down here in Texas. Dell, what do you think about Dell going in the second quarter?
Look, I think it. All right, can I just call the bottom in Dell right here, right now? Do you mind if I do that at 91? I mean, it's at 9 times earnings. Might someone wake up, Michael Dell? No, that's the previous guest. Dell is at 91. I have to say, fine. And by the way, just on NVIDIA, let me just say, it surprises you the most when it's the most hated. And when I woke up this morning, I said it was the most hated stock I can recall in all of 2025. Liberation might indeed happen this Wednesday, as investors in this market may finally be liberated from the uncertainty around tariffs. On Mad Money tonight, I'm revisiting the 25 questions I posed for 2025's market. First, from rates to labor, I'm looking at the state of the macro economy environment as Q1 finally comes to an end. Then I'm going sector by sector and giving you my latest on the themes I'm tracking. Later, what we can expect from tech stocks for the rest of 2025, and it's not that horrible. I'm looking at the state of AI, cyber, and tariffs, and more. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.